Dividend Enjoyer here, and today we're going to be talking about Keurig Dr. Pepper stock, ticker symbol KDP. As of recording, Keurig Dr. Pepper stock currently trades for $32.27. The PE ratio is 19.53, the dividend yield is 2.85% annually, the market cap is $43.77 billion. The 52-week low is 28.62, and the 52-week high is 38.28. Before we hop into the business and the different brands that Keurig Dr. Pepper has, I thought it would be apt to compare them to Pepsi. Here you can see they are the blue graph and Pepsi is the red graph. Pepsi's done worse year to date than Keurig Dr. Pepper because Pepsi is down 11.6% year to date and Keurig Dr. Pepper is down 0.98% year to date. The market cap for Keurig Dr. Pepper is $43.77 billion versus Pepsi's almost 5x market cap of $209.76 billion. Keurig Dr. Pepper also only has 28,100 employees, while PepsiCo has 318,000. The PE ratio of Keurig Dr. Pepper is more attractive at a 19.53 compared to PepsiCo's 22.53, and the dividend yield for Keurig Dr. Pepper is lower than PepsiCo at 2.85% versus PepsiCo's 3.55%. I thought rather than me just telling you every brand they owned, I could just scroll through and show you guys just how many brands they own or they work with. And they have a lot of carbonated drinks other than Dr. Pepper that I wasn't aware of. I kind of knew 7 Up was Keurig Dr. Pepper, but a lot of these, it's kind of crazy. Like, I never knew they owned Yoo-Hoo or Core Hydration. Very weird to me. Verner's, I didn't know they owned that either before doing this research, and it really just kind of speaks to the breadth of brands you get. It's very similar to a Pepsi, way lower market cap. And they also have, obviously, all of these ready-to-brew coffees. And here it says, Keurig Dr. Pepper brings you specialty coffee and a variety of other specialty beverages in K-Cup pods, including hot and iced teas, hot cocoa, and other beverages, for use with the Keurig brewers. We also offer traditional whole bean and ground coffee in other package types, including bags, fractional packages, and cans. We, together with our partners, bring consumers the high-quality experience they deserve from the brands they love, all through the one-touch simplicity and convenience of Keurig brewers. I am actually drinking, this side note, not related, some Cinnabon flavored coffee now. I like the cinnamon taste in it. It's really good. So they also own Mott's, and these are some of their partner brands. Obviously, most of them are coffee. That just makes sense. And I think this kind of gives you an idea of just how many brands they own or they're involved with. They're a very large company focused in this drink market. Thought it would be helpful to pull some stuff from the 10K and read it for you guys. Here they talk about their strengths and strategy. They say, our scalable business model provides a platform for future growth focused on strong, balanced portfolio of leading consumer-preferred brands with proven ability to expand via innovation, renovation, and partnerships. We own a diverse portfolio of well-known beverage brands. Many of our brands enjoy high levels of consumer awareness, preference, and loyalty rooted in their rich heritage. This portfolio provides our customers with a wide variety of products to meet consumers' needs and provides us with a platform for growth and profitability. We drive growth in our business through investments in innovation, renovation, and marketing to support our portfolio of owned brands and partnerships with other leading beverage brands. We have a robust innovation program which is designed to meet consumers' changing flavor and beverage preferences and to grow our share of beverage occasions. We have cultivated relationships with leading beverage brands to create a long-term partnerships that enables us and our partners to benefit equitably in future value creation. And where appropriate, we bring these partner brands into our own portfolio through acquisitions. We continually evaluate making investments in companies that fill in white space in our portfolio. So essentially, this is just saying that mergers and acquisitions are really important for Keurig Dr. Pepper to grow their free cash flow. But a really interesting thing that they also talked about is that they have a program where they're trying to figure out where consumer tastes are at, and they're really attentive to that and to trying to understand what kind of beverage the consumer wants, because this brand is highly competitive and constantly changing. For example, one thing that's been a really big trend lately is that the younger generations are not drinking as much beer. They're going for different seltzers and drinks of that sort. And I'm sure similar trends are happening within this space. I feel like we're moving more towards healthier kinds of things. And Keurig Dr. Pepper is obviously doing more research than me and knows more than me. And they're looking for brands that fill the niche that consumers are looking for. And I really love this part of the 10K. Here's another excerpt from their 10K. They say, "We manufacture and sell 100% of the K-Cup pods of certain brands, including Green Mountain Coffee Roasters, The Original Donut Shop, and McCafe, to retailers away from home channel participants and end-use consumers. We also manufacture K-Cup pods for our partner brands, who in turn sell them to retailers and consumers. Our partner brands include Starbucks, Dunkin', Folgers, Pete's, Newman's Own Organics, Caribou Coffee, and Community Coffee, among others. We also participate in private label manufacturing arrangements. Generally, we are able to sell these brands to our away-from-home channel participants and directly to consumers through our website at www.keurig.com. We also have agreements for manufacturing, distributing, and selling K-Cup pods for tea under brands such as Celestial Seasonings and Bigelow. We also produce and sell K-Cup pods for cocoa, including through a licensing agreement for the Swiss Miss brand and hot apple cider, including under our own brand, Mott's." Touched on it briefly earlier, but Keurig Dr. Pepper is going to buy the energy drink maker Ghost for over $1 billion. As part of the agreement, Keurig will make an initial cash investment of approximately $990 million to secure a 60% ownership stake in Ghost. The company plans to acquire the remaining 40% stake in 2028. And I went to Keurig's, official company website, and they talk about the Ghost acquisition, and specifically, I thought this paragraph was interesting. They say, "What drew you to Ghost? We have been competing in and closely examining the energy category for several years, and during this time, Ghost has emerged as a standout brand. It's one of the fastest growing names in the sector, featuring engaging packaging, a variety of exciting flavors, and a strong lifestyle positioning that resonates with consumers. Our investment creates a unique opportunity to leverage KDP's capabilities and resources to enable a broad reach and availability to a whole new wave of Ghost consumers. Equally as important, I believe the relationships we build with the founders and the innovators of our partner businesses differentiates KDP's portfolio shaping approach. We first met Dan and Ryan over a year ago, and we've been in conversation ever since, not only about the brand, but also their insights in the category and evolving consumer preferences. We see an opportunity to create something special by combining their entrepreneurial spirit and vision with the power of KDP." So, Keurig Dr. Pepper is essentially saying that this acquisition makes a lot of sense for both sides, because Ghost is a brand that has a lot of future value, but they need capital to kind of continue going in the direction that they want. And KDP has way too much capital and not enough ways to grow. So it just makes perfect sense for them to combine. The founders make obviously a lot of money, and Keurig Dr. Pepper is able to grow the free cash flow and get into the energy space with a company that they like. I also wanted to talk about the dividend compound annual growth rate, because I'm going to be doing a dividend discount model valuation of Keurig Dr. Pepper. So as you can see, the 1-year dividend growth rate is 7.36%. The 3-year dividend compound annual growth rate is 9.04%, and the 5-year dividend compound annual growth rate is 7.84%. And we're going to be logging this with different future anticipated growths and seeing what the value of Keurig. I did a dividend discount model for Keurig Dr. Pepper, and I have to say the dividend discount model is usually not a very good actual indicator of the value of a company, because ultimately companies' valuations are based on future cash flows. But if we were just looking at their ability to grow the dividend, then the company is currently overvalued from these metrics. Now, I will say, I personally, even though the channel name is Dividend Enjoyer, this is kind of ironic, but I would rather that Keurig Dr. Pepper actually make strategic acquisitions and grow the cash flow than just pay me a dividend because they don't know what to do with that money. So next we're going to be doing a free cash flow valuation, and I'm going to walk you through the weighted average cost of capital that I was able to calculate and the free cash flows. And it's not looking good. I mean, we have inconsistent cash flows though, and as you can see, the 2020 and 2021 and 2022 were all bigger than the 2023 and 2024 12-month trailing figures. And I have a growth rate of 8% here and still saying it's a sell. I don't think they can achieve a higher amount than this. And I also think this is a very competitive business with a lot of substitutes for different things. I do, however, really like the Keurig part of the business, but the valuation metrics are not good. 8% was kind of the stagnant amount, but I also think that we're going to have a lot of different factors that are going to affect how much money Keurig Dr. Pepper actually makes. And one of those could be, the type of acquisitions that they get. Ghost Energy is obviously their biggest one to date, which is $1 billion. And I think that if they're able to make strategic acquisitions that make sense, the stock could grow at a very high rate. I also think that if they're able to leverage the Keurig money that's coming in to buy other businesses, that makes sense too. And overall, from this, both models, the dividend discount and the free cash flow, I'm really disappointed because I really wanted Keurig Dr. Pepper to be something that was really undervalued and that I'd really want to buy. But at this price, I just can't see a reason to buy this stock. And it's really depressing because I really like the business model and I think it's a solid business. I don't think they have too much debt, but when a business is too expensive, especially at times like this when the whole market's falling, I think you're going to find better opportunities than Keurig Dr. Pepper, just being completely honest with you. If you have already bought in, I think you should probably hold. Again, not a financial advisor, not financial advice, just what I would do if I was in that situation. Because I think the business is actually really good. And I think that there is a chance that they could grow a lot because I think that they realize that the business is competitive and they've operated there. They've acquired a lot of brands that we've covered in this video that I think are really strong brands. And some of them are going to outperform and some of them are going to underperform. So essentially, I feel like they're going to have to be very strategic in what they do. They know that as outlined by their 10K. But if we put some different ranges for our growth rate, 7%, we get a $28 discount cash flow per share value. But let's see what we get when we want to get a buy. 12% would definitely be a buy. 10%, if they could increase cash flows by that, it's undervalued by $5 at that point. If we only get growth of 5% over the next 9 years, that's really bad. We have to have minimum at least, I believe, 8.5% around there of growth on average per year of the free cash flow to be able to justify buying Keurig Dr Pepper. And I don't think that they can reliably grow the free cash flow at that rate on average. So, I really like the company, and it's really depressing, but I have to say that I I don't think it's worth buying right now. And that's kind of the video. So, if you guys like the video, please leave a like, please subscribe to the channel.